Hello everyone and welcome to my channel once again. Last week we had discussed few stocks which would be doing good, and I think those are the precise stocks which did manage to go up. For the likes of Bajaj Auto, if you'll see, it has almost gone by 2900 rupees. It has almost gone to 2900 rupees, and now I think it is just 10% away from making new highs. And if we see the entire automobile pack, all of them are trading near to its 52 weeks low or almost 30% down from its high. But I think Bajaj Auto is the only one which is just 10% away from making new highs and will continue to rally the way it has been rallying till date. So I think Bajaj Auto is one which we should continue to hold and can also have a fresh buy even at current market price for a good target of more than 3000 rupees. Second we had discussed was a sell on Maruti, because I had said that if GST cuts on automobiles does not happen, then of course these all passenger vehicles and all automobile stocks are was going to witness a downfall. And that's what I think a couple of news channels did flash as a headlines, that the probability of a GST cut on automobiles looks slim. So and also there is a fresh negative news for Maruti which augurs a fresh sell. And I'd always been recommending sell on rise approach for Maruti on all my portals and all my channels. And the fresh negative is that Maruti's market share, which was earlier 52%, has now fallen down to 49%. So if we see, for the first time ever, Maruti's market share has dropped below 50%, which is definitely a cause of worry. And this was this data presented by the CM. And if you see, overall the entire industry did face a slowdown. But to whom is Maruti losing its market share? And it is to none other than Hyundai. Even if you see, Toyota has been able to garner or increase its market share. M&M has been able to increase its market share in the same period when there is a slowdown in the entire sector. But there is something not going right with Maruti, be it the production cuts in the diesel vehicles or its utility vehicles not being good, Ertiga's long waiting demand period in the SUV segment, and of course with all the production cuts and no demand for its key cars like the hatchbacks and sedans, because of the obvious reasons of Olas and Ubers of the world. So Maruti, I think I continue to maintain my sell on rise approach, and will definitely correct or be in a very range bound stock. So Maruti is an absolute avoid even at current juncture. Now the entire week we were waiting for FM's press conference, and it did happen yesterday. But again, I wouldn't show my thumbs up to the press conference that was there yesterday, because we were expecting some kind of reforms to kickstart the economy with a V-shaped recovery, and which did not happen. Because what are the kind of steps, major steps that yesterday's press conference announced was that additional 1.5 lakh rupees of exemption on the interest on affordable housing up to 45 lakhs. And I think this was not something that we were looking at, because even prior to these kind of announcements, good companies in the realty space like Shobha Limited, Godrej Properties have been able to report good set of numbers. For example, 90% on a bottom line level on a yearly basis for Shobha Limited. So the kind of boost it has given is a no knee-jerk kind of a reaction for good companies like Shubha, because these kind of sales was picking up for Shobha even prior to these kind of reforms. So I think FM's press conference is now taking a famous theory that we have studied in economics, that is the margin of diminishing utility. Like more and more she comes with a press conference, but the impact of a press conference is now going to be from minimum to almost flat. So I think this is the second press conference that she did. And again, which I mean, of course, the first one was a hit. The second was the merging of the PSU banks, and third is the yesterday's one. Which are the major ones, and again, I don't think so it's going to have a spark, on the markets. That's what we're going to see. So those kind of reforms, what she says, is good, in the long term. But retailers like you and me, if we want to have, what do we want? Is the direct tax reduction? Is the GST reduction? We want either reduction or abolishment of LTCG. But these kind of reforms are just not happening, and that's why the sentiments, is really weak, and I think it will continue to stay weak in the capital markets, at least in the near term. So I would again advise to have a stock specific approach, and probably we should now adopt to the fact that probably the government just does not want to cut taxes, and that is why just stick to the good earning stocks. And of course, tomorrow we're going to see a fresh sell in the market because of the oil impact. That we have seen major explosion in Saudi Arabia, and there, of course, with this kind of explosion that's happened, it will definitely bounce Brent crude to $70 per barrel, and it will definitely have a direct impact on crude related stocks like Asian Paints and Pidilite. But I feel these stocks should be bought in this correction, because in the Q1 earnings we have seen that the volume growth for both Asian Paints and Pidilite managed to be in double digits, and we know that for Asian Paint, two of its production facilities have come on stream, and that is why volumes would pick up. Even for Pidilite, management did say that volumes will continue to remain intact, margins would continue to grow, and that is why I feel these two stocks, when they correct tomorrow, should be bought in the correction. Because if we see the entire Q2 is now going to be over within 15 days, and in the entire Q2 we have seen crude remaining in our lower side of the price target. So it wouldn't have much impact on the crude related stocks, at least in the Q2, but definitely in Q2 volume surge would be on the cards, and that is why they will report good set of earnings. Moreover, also the kind of explosion that has happened and the impact that it will have on the crude is very short-lived, and that is why any sort of such short-lived measures should be always utilized, or one should capitalize on buying good quality stocks. So let's see how it pans out the next week, because I think it's going to be more on the bullish side, because though we have not so very proactive government policies, though crude price is going to be almost near $70 per barrel. But let us not forget that the US-China trade war has come to an ease, and also Fed is going to have its meeting in the next week, where we're expecting a rate cut with the dovish commentary. And I think that is definitely going to cheer the US market and the global market. As a result, we're going to have a cascading impact on our Indian markets. So I feel that the trend of the market is going to be on the bullish side for the week, though tomorrow it might have fresh short or a negative build up, at least in the starting hours of the trade. But overall, I think the face or the scenario of the market remains bullish, and that is why all the good quality stocks should continue to do good. And of course, the likes of all the mid caps that I've been always recommending, Metropolis, KEI, Shobha Limited, Maharashtra Scooters, all of them have been doing really very good, and any of them, if you see it correcting, you can definitely buy in this correction. that's it from this video. If you enjoyed watching this video, do like the bell button and subscribe to my channel. Do like the video and share with as many people as you can, and you can also follow me on Twitter where I keep sharing timely updates. So bye from now.